You just closed on your first house. $380,000. 3 bedrooms. Nice neighborhood. Your parents are proud. Your friends are jealous. You post the keys on Instagram with a caption about the American dream. You feel like you made it. You're a homeowner. Month 1, everything is perfect. You paint the bedroom. You buy furniture. You're living the dream. Month 2, you get a letter in the mail. Property tax bill. $3,800. Wait, what? You already paid the down payment. You're already making the mortgage. What is this? You pay it because you have to. Month 3, the AC stops working. It's July. It's 95 degrees. The repair guy comes out. $4,200 to replace a compressor. You put it on a credit card because you don't have $4,200 sitting around. You just spent everything on the down payment and closing costs. Month 4, you realize your mortgage payment is $2,400, but your total housing cost is actually $3,600. And you have no idea where all your money is going. Welcome to homeownership. The thing they forgot to tell you about. If you ever wondered why homeowners seem stressed about money even though they own their house, stay with me because what I'm about to show you will change how you think about the biggest purchase of your life. My name is Mike and I make videos about how money actually works in real life. Quick disclaimer, I'm not a financial advisor. This isn't financial advice. I'm just sharing what I learned the hard way about the real cost of owning a house. Talk to a professional about your situation. Here's the deal. When you're thinking about buying a house, everyone tells you about the mortgage payment. $2,400 per month. You can afford that. But there's a catch. The mortgage is just the beginning. It's the smallest part of what you'll actually pay. Nobody tells you about the property taxes, the insurance, the HOA fees, the maintenance, the repairs, the upgrades, the utilities, the yard work, the things that break. And they all break. Everything in a house is designed to break right after the warranty expires. It's like they have a timer. The villain here is what I call the hidden cost monster. It's all the money that disappears into your house that you never see coming. You budget for a $2,400 mortgage, but you're actually paying $3,800 per month when you add everything up. That extra $1,400? That's the hidden cost monster eating your paycheck. And most new homeowners have no idea it's happening until they're drowning. Let me break down what homeownership actually costs. You've got your mortgage. Let's say $2,400 per month on a $380,000 house with 10% down. That's what you see. But here's what you don't see. Property taxes, $400 per month. That's $4,800 per year, and it goes up every single year. Homeowners insurance, $180 per month. That's $2,160 per year. HOA fees if you're in a neighborhood with one, $200 per month. That's $2,400 per year for them to tell you that you can't paint your door red. Maintenance and repairs, $450 per month on average. That's a rule of thumb, 1% to 2% of the home value per year. On a $380,000 house, that's $3,800 to $7,600 annually. Let's call it $450 per month. Utilities that are higher than renting because the house is bigger, add $100 per month. Yard maintenance, tools, equipment, $80 per month. Now add it up. Mortgage, $2,400. Property tax, $400. Insurance, $180. HOA, $200. Maintenance, $450. Utilities, $100. Yard, $80. Total, $3,810 per month. You thought you were paying $2,400. You're actually paying $3,810. That's $1,410 more per month than you budgeted for. That's $16,920 per year in hidden costs. Stop this video right now and calculate your own numbers if you own a house. Add up everything you actually pay. Mortgage plus taxes plus insurance plus HOA plus repairs plus everything. What's the real number? Are you seeing it? Here's the part that makes me mad. Real estate agents and mortgage lenders only talk about the mortgage payment. They ask, what can you afford per month? You say $2,500. They say, great, we can get you approved for a $400,000 house. But they never mention that your real monthly cost is going to be $4,000. They never mention that you need to keep $10,000 to $20,000 in reserves for when things break. Because things will break. Your water heater will die. Your roof will leak. Your foundation will crack. Your vac will fail. And every single one of these costs thousands of dollars. And you can't just not fix them. You have to fix them. It's your house. Let me show you two people who bought houses the same year. Person A and Person B. Both 28 years old. Both make $75,000 per year. Same income. Person A buys a $400,000 house in 2020. Puts down 10%, so $40,000. Mortgage is $2,520 per month. Person A thinks, I can afford this. I'm currently paying $2,000 in rent. But here's what Person A's real costs look like. Mortgage, $2,520. Property tax, $420. Insurance, $200. HOA, $150. Average monthly repairs and maintenance, $500. Utilities, $280. Yard, $90. Total, $4,160 per month. That's $49,920 per year going into the house. After taxes, Person A makes about $56,000. The house is eating $49,920 of that. Person A has $6,080 for the entire year for everything else. Food, gas, car, insurance, life, savings, retirement, everything. Person A is house poor, completely trapped. After 3 years, Person A has spent $149,760 on the house. The house is appreciated to $440,000 in a good market. Person still owes $333,000 on the mortgage. Equity, $107,000. But they spent $149,760. They're negative $42,760 even with appreciation. Person B decides not to buy, stays renting, pays $2,000 per month for a nice 2-bedroom apartment. No property tax, no maintenance, no HOA, no repairs. Appliances break, landlord fixes them. Total cost, $2,000 per month. That's $24,000 per year. Person B makes the same $56,000 after taxes. Has $32,000 left over every year. Person B invests $2,000 per month. The same amount Person A is spending on hidden costs. Over 3 years, Person B invests $72,000. At 8% average return, that's worth about $80,000 after 3 years. Person A has $107,000 in home equity, but spent $149,760. Person B has $80,000 in investments and spent only their rent. Person B is more liquid, more flexible, and only $27,000 behind in net worth. But they have zero stress, zero surprise $4,000 AC bills, and the freedom to move anywhere. Who's actually winning? Which person sounds like you? The one trapped in the house or the one with flexibility? Comment below because this decision affects your entire life. Now here's the psychology that gets people. Owning a home feels like success. Renting feels like failure. We've been programmed to believe that. Your parents told you to buy a house. Your friends brag about buying houses. Society says homeownership equals adulthood. But there's a catch. That programming was created in a different era. When houses cost 3 times your annual income instead of 7 times. When property taxes were lower. When things lasted longer. When wages grew faster than home prices. The game changed, but the advice stayed the same. Now people are buying houses they can't afford and calling it success while they are drowning in hidden costs. But there's another catch. The biggest one. You don't actually own the house. The bank does. You own whatever equity you've built. If you put 10% down, you own 10%. The bank owns 90%, and you're paying them interest on their 90% every single month. On a $380,000 house with a 7% interest rate over 30 years, you will pay $523,000 in interest alone. Read that again. Over $500,000 in interest. You're paying $903,000 total to own a $380,000 house. And that doesn't include the property taxes, insurance, maintenance, or repairs. Add all that in, and you're paying over $1.2 million for a $380,000 house. And at the end, it'll probably be worth $700,000 if you're lucky. The house didn't make you rich. You paid $1.2 million over 30 years to own something worth $700,000. Let me show you what most people don't calculate. The true cost of ownership. You buy a $380,000 house. 30-year mortgage at 7%. Monthly payment, $2,395 principal and interest. Over 30 years, that's $862,200. Add property taxes at $400 per month for 30 years, $144,000. Add insurance at $180 per month for 30 years, $64,800. Add maintenance at 1.5% per year, $171,000 over 30 years. Total paid, $1,242,000. After 30 years, you finally own it free and clear. It's worth maybe $800,000 if you're lucky with appreciation. You paid $1,242,000. You have an asset worth $800,000. You lost $442,000. But everyone told you homeownership builds wealth. Now I can hear the objections. Mike, renters are throwing money away on rent. Homeowners are building equity. Let me be clear. You're both throwing money away. Renters throw away rent. Homeowners throw away interest, property taxes, insurance, and maintenance. Let's compare. Renter pays $2,000 per month. Over 30 years, that's $720,000 thrown away. Gone. But they are flexible. They can move. Repairs aren't their problem. Homeowner pays $2,400 mortgage, but $3,810 total cost. Over 30 years, just the interest is $862,200. Add property taxes, $144,000. Add insurance, $64,800. That's $1,071,000 thrown away on things that don't build equity. The renter threw away $720,000. The homeowner threw away $1,071,000. The homeowner threw away more money and has no flexibility. Stop right now and think about your situation. Did you buy because you wanted to or because you thought you were supposed to? Here's what nobody tells you. You should only buy a house if all of these are true. 1. You're staying in the same area for at least 7 years. 2. Your total housing cost, including all the hidden costs, is less than 30% of your gross income. 3. You have 6 months of expenses saved on top of the down payment. 4. You're maxing out retirement accounts already. 5. You actually want the house, not just the idea of ownership. If all 5 aren't true, you're probably better off renting and investing the difference. Here's the bottom line. Houses are not investments. They're expenses. Very expensive expenses. An investment makes you money. A house costs you money every single month. Forever. Property taxes forever. Insurance forever. Maintenance forever. Things breaking forever. It never stops. The only way a house makes you money is if you sell it for more than you paid, including all costs. And most people don't. They pay $1.2 million over 30 years for a house worth $800,000. That's not an investment. That's a $400,000 loss. Here's what you should actually do. First, if you're thinking about buying, calculate the real cost. Mortgage plus taxes plus insurance plus HOA plus 1.5% of home value annually for maintenance plus high utilities. That's your real number. Can you actually afford that and still save for retirement? If not, don't buy. Second, if you already own and you're house poor, consider selling. I know that sounds crazy, but if your house is eating all your money and you can't save or invest, you're not building wealth. You're treading water. Sell. Move to a rental and start investing aggressively. Third, if you're renting and feel bad about it, stop. You're not failing. You're being smart. Take the money you're saving on hidden costs and invest it. Build actual wealth, not equity in a depreciating asset. Your future self is watching you right now. They are not impressed by the house you bought at 30. They are looking at your investment accounts. They are looking at your freedom. They are asking if you were house poor for 15 years or if you built real wealth. They are telling you that having $500,000 invested feels way better than having $200,000 in equity in a house that owns you. Listen to them. The real estate industry is counting on you to believe the dream. Buy a house. Build equity. That's success. But they're not telling you about the hidden costs. They're not telling you that most people are house poor. They're not telling you that renting and investing might actually build more wealth. But now you know, and you get to choose. The house or your freedom. One of them is going to eat your paycheck. Make sure it's worth it. So tell me in the comments, do you own or rent? And be honest, if you own, what's your real total monthly cost including everything? Let's see how many people are actually house poor and don't even realize it. And if this video just changed how you think about homeownership, smash that like button and subscribe because I'm making more videos showing you the real cost of things everyone says you're supposed to want.